what if Australian dollar depreciate by 90%? It's a hypothetical what if. Well, God forbid, it will never happen. But what if our Australian dollar used to say worth $1 and in the future is only worth 10 cents or $0.1? Although it's an unlikely scenario, but what if? And what would you do? Would you put your money into gold or cryptocurrency? Or would you invest it in stocks that you really understand? I'm not a macroeconomics expert, but I found something that I learned from what happened in the economy of Turkey that could help us understand as of why a lot of people still invest in stocks more than investing in gold or cryptocurrency. That is, asset that has no internal rate of return, or some say a speculative asset, meaning you want somebody else to buy your gold or cryptocurrency at a higher price. Let's have a look at what happened to Turkish lira for the past 15 years. Back in 2007, one Turkish lira equals $0.85, almost at the same value. And fast forward 15 years, one Turkish lira is worth $0.058. So used to worth 85 cents, now is only worth 5 cents US. That is a 93% decline in Turkish lira value. And if we convert that into annualized depreciation, that is about 16% per year for the past 15 years. And the reason is nobody knows. Even the smartest professor in macroeconomics still not yet fully understand what's happening here. But most people will say, oh, they print too much money, or it's a bad monetary policy. And yet, if we look at the GDP of Turkey from 2007 till 2020, the total GDP hasn't grown quite a lot, but it has peaked around 2013. Again, we're not a macroeconomics expert. And if we look at Turkey's 100 top companies index called BIST 100, for the past 15 years, the market return of the top 100 companies is about 4.4x total return. So if you have a currency that is depreciating at the rate of 16%, just investing in the index fund of these 100 top companies based on market cap weight, there are some protection. This index can protect you by 10%, although you still have to deal with the negative 6% per year for the past 15 years. And if you invest in gold since 2007 till 2022, in that 15-year period, gold has appreciated in value by 2.4x, or in annualized return, about 6% per year, which is less than what happened to stocks. Stocks has done 10%, and gold has done 6%. But still, it's not enough to protect you from Turkish lira going down in value, because you need at least 16% per year. Right? And if we go to the second option of cryptocurrency, thinking it will protect you from inflation, that monetary policy, you will lose 100% because the crypto exchange boss running away from the country with billions of dollars. The last candidate that I always advocate to a lot of people is to go for value investing or intelligent investing, meaning understanding the business and viewing a stock as a piece of a business. And I found this company that is one of the biggest company in Turkey called Turkey Petrol Refineries with the ticket code TUPRS. If you look at the share price for the past 15 years, it has appreciated by 8.7x, or in annualized term is about 15.5% annualized return per year. That's just in share price appreciation. So in that sense, it has solved the problem of Turkish lira depreciating. You will also get return not only in the share price appreciating, but also in the dividend payout. And since this Turkish refinery company refine oil and they conduct their transaction in US dollars, they are always be protected from the declining value of Turkish lira. And in summary, the dividend yield for the past 15 years, if you purchase in this Turkish petrol refinery stock in 2007, the average dividend yield is about 14% for the 15-year period. So you get 14% per year of dividend yield, and on top of that, your share price will compensate the depreciating value Turkish lira. And if you study the business further, looking at just the return on equity, it's a very profitable business. Everyone always needs fuel to drive economic growth. They have some hiccups in 2020 because of the COVID pandemic, but then that's the nature of business. There's ups and downs, but over the long term of 15 years, they have achieved some pretty high return on equity. I'm talking about over 20%. And again, it may seem that the share price has done amazing by 15% per year, but that is due to poor monetary policy. If we convert the market capitalization into US dollars based on corresponding exchange rate for the year, we can see the market capitalization for this business is actually quite stable over the 15-year period, with a slight appreciation over the 15-year period, about 6% per year. So from just this quick study I've done, I'm not an expert economist, but I can see why Peter Lynch in his book, One Up in Wall Street, mentioned that it's way more worth it in the long term to invest in stocks. But you have to be careful which stocks or shares that you should invest. You should pick great businesses with the strong moats and the big potential for economy of scale. Disclaimer, this is just educational videos only, not an invitation for you to buy any oil company as a hedge to protect you from inflation or whatever depreciating value of Australian dollars, but to really see the comparison that speculative assets such as gold and cryptocurrency sometimes doesn't have enough return promised to compensate the extreme cases of depreciation of some currencies such as Turkish lira. Let me know what do you think, and thank you.